Welcome to another episode of MEPS Market in Minutes podcast series. In this episode, I'm joined by steel market analyst Chris Jackson, who will be taking us through some of the developments in the steel sector in Central Europe, detailing price, demand, supply, and a little bit of a view further down the road, looking into the rest of 2026. Chris, welcome. It's good to have you here.
Yeah, thank you, Tom. Yeah, thank you for the invitation. An interesting time. So yeah, great to get an overview and something.
Great stuff. Well, listen, we all know by now that you're intrinsic to the content that MEPS produces for its international steel coverage of the Central European sector. So we'll get straight into some questions to you and try and make this a nice, snappy episode of Market in Minutes. So we'll start off by, reflecting on the fact that the European supply chain generally looks to be reshaped this year by CBAM taxes and the evolution of the European Commission's safeguard measures. What's the steel supply situation looking like at the moment in Central Europe specifically?
Yeah, it's obviously a very interesting time from a supply point of view, and I think it's fair to say when we talk to a lot of the market participants within Central Europe that they're finding that their procurement decisions are becoming increasingly limited, and that's certainly from a local regional perspective and also from imports from outside of Europe. In terms of local supply, the likes of ArcelorMittal Poland, US Steel, Kosici, for flat products are certainly producing significantly below their operational capabilities, and certainly both operations are certainly prioritizing their contractual arrangements, whether that's annual deals set at the beginning of the year or those on a half yearly and quarterly basis. So this is certainly making spot volumes increasingly scarce, and the people who we talk to do report that they are finding lead times are slightly extended from both mills, and there's certainly been a significant impact in regards to recent trade legislation. The implementation of the CBAM rules at the beginning of the year has certainly tightened the trade legislation and made imports from outside of Europe increasingly problematic. A lot of the Central European buyers who have traditionally bought from outside of Europe are having to work typically with default values set by the European authorities, and it's almost deemed that those default values are a worst case scenario at this point. And despite many traders offering material on a DDP basis, a customs cleared basis, they're finding that there's very little or no price advantage with non-European offers compared to those offered from local and regional sources. So certainly a trend that we've seen throughout Europe, but is particularly acute in Central Europe, is that people are finding that supply is quite tight. In terms of flat products, that is particularly seen on cold roll coil, which has become increasingly scarce across the region. It's fair to say that the market has traditionally or historically been dominated by imports, and not just CBAM, but an ongoing anti-dumping investigation against 5 countries who traditionally served the European market is maybe adding another layer of uncertainty. So we are finding that people are reporting to us that cold roll coil is particularly scarce, not just locally, but also from outside of Europe as well. Now, the hot roll coil supply is more readily available, certainly compared with its cold rolled counterpart, and one of the key reasons behind that is the emergence of the Nova Hut operation, which is located on the former site of Liberty Ostrava, but is certainly using toiling processes and facilities to supply customers not only within Czechia, but also in the Slovak and Polish market, particularly in the south of the country. We believe that Nova Hut are offering some competitive prices, not just on coils, but sheets and downstream products as well. And certainly in terms of sheets, that is prompting some fierce competition amongst the regional service centres and distributors. In terms of plate products, the two major mills there, Huta Češťové and Vitkovice Steel in Czechia, we're finding that their delivery lead times are relatively long at this point in time as well. There's a number of reasons behind that. In terms of Huta Češťove's case, the transfer of ownership recently to the Polish Ministry of Defence, it was argued that it maybe caused one or two delays, and people who bought for January-February delivery have reported to us that these deliveries are yet to be received, and we understand that Huta Češťové are now quoting June, July for new orders. So again, a combination of the transfer of ownership and also themselves operating below their capabilities is resulting in those long lead times. And we are finding Vitkovice Steel, who are a typical re-roller, will be looking at maybe alternative sources of slab at the moment. Again, another consequence of the CBAM implementation, and we do hear that their lead times are now into the second quarter of this year as well. So Polish and Czech buyers are finding that plate is becoming increasingly difficult to source, and Italian suppliers who have typically serviced the region are finding that they're relatively price uncompetitive at the moment, and that's largely because of the high transport costs in service into the region, and a lot of Italian plate mills and re-rollers are deciding to maximise their opportunities in the local market at the expense of export sales to Central Europe.
Okay, and as we speak, I guess there's a little uncertainty about the effects of the Middle East conflict as well. I think we'll expect to see imports being disrupted as a result of that. Just we'll move straight on to look a little bit of the demand aspect, really. We've previously noted at MEPS that the OECD's GDP growth forecasts for Poland are particularly positive, but Czechia are also ahead of the eurozone average. Is this translating into strong demand in the region?
Yeah, that's an interesting point, Tom, and certainly one that we raise on a common basis with our research partners. And I must say, the general consensus is there's actually a slight disconnect in terms of maybe the headline economic news that's relayed and maybe what they are actually seeing in their day-to-day activities. I think in both countries, there's a general acceptance demand is weaker than they anticipate or would like, as per what we're seeing in other parts of Europe, like Central Europe and Western Europe, for instance, as well. It's an interesting trend. I think there are exceptions to the rule, and there is almost some causes for optimism for those in Central Europe. But I think certainly the statistics are not being borne out into the level of orders and the level of inquiries received. If we look at a few of the steel consuming areas, the automotive sector for one, the Czech automotive sector is certainly an area that is bucking the overall trend. Participants who we speak to who are close to the stampers and the tier one car companies such as Skoda Auto are reporting that there's relatively good volumes at the moment, and they expect that trend to continue in the short term. And there's certainly been some good news with relation to Toyota Czechia, who I believe will soon be producing the first battery electric vehicle at their Kolin plant. So again, there's causes for optimism there. On the flip side, we understand that Stellantis, who are based in Poland, will be permanently withdrawing their third shift at their Tychy operation. So again, the automotive trend is quite mixed, and we certainly feel that the production and sales levels are relatively stronger in Czechia than what we're seeing in Poland at the moment. In terms of construction activity, which is obviously a key driver of steel demand, it's fair to say in both countries, participants have reported that it was a relatively harsh winter in both countries, which obviously had an impact on existing projects, existing building work that was taking place. The cost of borrowing is also relatively high in Poland, despite falls in 2025 and maybe less so in Czechia, and that's certainly weighing down quite heavily on on market sentiment and consumer confidence as well. This is not likely to be helped from April onwards. We understand that there will be a tightening of the lending rules by the Czech National Bank, which will be enforced from April, and that again may have a negative consequences in terms of medium to longer term construction activity as well. So two of the major segments there. Maybe there's pockets of strength, but maybe a few question marks again. In Poland, there's a little bit of hope attached to the national recovery plan, which is in place, which will involve significant government investments, both in industries such as the road and railway segment, and people are talking about that quite optimistically, maybe not for the short-term day-to-day activities, but over the longer-term period as well. And a few of the longer-term projects there involve the Interreg railway project, which is looking at the railway infrastructure between Poland and neighbouring Ukraine, and also the Polska project, which will be a new airport located between Warsaw and Lodz. And again, that should bring increased connectivity to the region, but some great opportunity, as that will be a transport hub for the region and I guess for the country as a whole.
Okay, so we've talked a little bit there about supply and demand in Central Europe. How's this translating into the price trends that we're seeing in the region?
Yeah, I think the pricing trends that we've seen in Central Europe have almost mirrored that of what we've seen in southern, western and northern parts. A few of the points we mentioned earlier in the discussion, not necessarily in terms of demand, but certainly in terms of supply. We have seen relative strength in the coil and sheet market, for instance. ArcelorMittal, often recognised as the price leader, the market driver in Europe as a whole. They have been quite public in stating their targeted ambitions for hot rolled coil and the downstream products, and we certainly feel that they have achieved those price increases in part, but maybe not in full, and participants are still able to buy significantly below the official asking levels, but the direction of travel for coils is certainly up as well. In terms of plate, as we mentioned earlier, the supply constraints that we're seeing both from a local and a non-regional perspective has certainly driven prices up there, and we have actually seen a twofold impact of CBAM, which is not just on the finished plate, which is maybe impacting on imports coming into Europe as a whole, but also on imported slab coming into the region as well. So we have seen a spike in slab costs, and the expectation and the likelihood that the Russian slab quota will be fully utilised before the end of the quota period is another cause for concern as well. So we have seen plate prices move up quite sharply, and maybe that's a reflection of the cost pressures the plate manufacturers and re-rollers are facing to ensure that they are covering the additional costs imposed resulting from CBAM, and also even recent costs such as the expected rise in electricity and gas resulting from the current Middle East crisis. So again, the re-rollers have a task to cover their costs, and that's certainly been reflected in the finished prices. In terms of the long product market, we've probably seen a little bit calmer to all intents and purposes relative to the flat product market. I think it's fair to say that we have seen upward movements, and at the moment we understand that ArcelorMittal and a few other steel manufacturers have withdrawn their long product price quotations, maybe assessing the market, and there is a great likelihood that they will go in at a much higher price level when they return to the market. So a mixed signal across the range of carbon products, but certainly the direction of travel is up, and the magnitude and scale of that increase will depend on the products involved.
Great stuff. Well, I was about to ask you about the outlook for prices, Chris. I guess you've touched on a little of it there. But what are MEPS's expectations for Central European steel prices?
Yeah, I mean, certainly in terms of the forward outlook, there is an expectation that positive price trend will continue in the short term. That is certainly our expectation in March, and certainly for April as well. I think at this point we are seeing, obviously there's maybe a few drivers for an upward pricing trend, as we mentioned before, in terms of tight supply for in relative terms for flat products in general, including the coil and the plate, and also some cost drivers as well. In terms of we have seen scrap costs move up. There is an expectation that energy costs will move up again as a result of the Middle East conflict, and EAF-based producers in particular will be obviously looking to recoup those costs. So there's certainly the potential for price rises in the next couple of months, maybe a short-term shock as a result of the geopolitical events that we're seeing around the world. But there's certainly a question mark whether those price increases will be maintained over the longer term, given that there is an absence of demand support at this time, and there are modest, limited expectations of any kind of demand recovery in the same time frame. So certainly the potential for price rises, but at this point, certainly the price rises are very much on fragile ground at this point.
Okay, that's great. We've covered all bases there, Chris. I think it's a great summary of the steel price trends and levers for those movements that you've just given there. So thanks ever so much for joining me. It's been good to have you on again.
No, thank you for the invitation, Tom, and obviously a very interesting time for everyone involved in steel purchase. So hopefully it's given them a useful insight there. Thank you for the invitation.
Great stuff. Thanks again.
Thanks, Tom.